All right. All right. Good evening, everyone. Thanks for joining. This is going to be the first session of the year, and this is going to be the first session um, for this series. Basically, we are trying to cover everything from charting to technical analysis in this series. And today we're going to cover charting and timeframes. And this particular session is going to help anyone who is trying to get into technical analysis, and this is going to be the very basic um, session that we would need for anyone to understand when you open any charting platform like thinkorswim or Webull or TradingView, TradeStation. There are many charting platforms, and uh, whichever platform you see, you basically see the same chart. They could be, the options could be different. It could be on different sites. The layouts could be different. But in short, this is what you're going to see on your charting platform. And if you basically open Robinhood, all you'll see is like a line, uh, something like this. But then if you want to move one step ahead, and then if you want to try charting, this session will help you to get started with that. So what is charting, and how does chart help us in understanding the price action of any given security? So let's just take any ticker, SPY, Apple, Facebook, or Meta, or Amazon, anything. The candlesticks on the chart will actually tell us a story, and we should not look at it as just some random candlesticks, but each candlestick right here, it will tell us a story, and we have to understand what it is trying to say, and for that we have to understand what are candlesticks. So every basic charting platform will have the standard candlesticks, right? And each candlestick represent the time frame that we are selecting. What that means is, if I select 1 year, 1 day in the time frame here, under time frame in thinkorswim. So for this session, we're going to use thinkorswim. It's going to be similar for any charting platform you use. Since I am good at thinkorswim, we're just going to use that for the demo. And this particular time frame is 1 year, 1 day. That means you will see each candlestick represents 1 day, and then this is a period for 1 year on the full chart. Okay. And one basic thing that we have to understand in a candlestick is, let me zoom into this candlestick. Let's take this one, for example. Okay. How to understand or how to read a candlestick. So this right here is called the body, and these lines are called the wicks. In a candlestick, this is called the body. These are called the wicks. Here, this is the body, and the lines above, those are the wicks. Body, wicks. So let's see how to represent the high, close, and open in a candlestick, right? So this right here, when you see a green candlestick, that means it has opened here. The start of the body is the open. This is the close. So the price on 11/8, November 8th, for SPY, it opened here at 381.1 and it closed at 381.97. The price is right here, the very end of the screen. So SPY opened at 381.1, closed at 382. And the VIX represents this, the bottom is the low of the day, which is at 377.68. And then this wick at the top, it represents the high of the day, which is 385.1. Okay, so this is open, close, low, high, open, close, low, and high. So what does this candle tell me? What story does this candle tell me? What it tells me is the day opened for SPY, it opened at 381.1. At one point in the day, it went all the way down to 377.74. In the same day, at some point, it also went at 385.13. But by the close, it settled at 381.97, right? From this, what we can understand is that the price opened here 381, closed 382. At one point, it went to 377, also went to 385. That means the buyers and sellers have agreed at 382 as the price for S&P 500 on November 8th of 2022, right? And let's look at this candle, for example. So it opened at 388, it closed at 394. At one point in that day, it also went to 385. It also went as high as 395. This is on November 10th, for example, right? So this is basically a green candle. What it means is it basically opened low and closed high. It opened low, closed high. That's why it is a green candle. So let's look at the red one, right? So this is where it opened for the red candle. The top is where it opened and the bottom is where it closed, right? So open, close, high, and low. So this is where it opened and this is where it closed. So on 9th November, S&P 500 opened at 379.94 and then it closed at 374. So this exact point is where both the buyers and sellers agreed by end of the day on S&P 500, right? And then at one point it also went to 373, but it went up. Means there are buyers who went and bought above the bid, and then they moved it up to 374. Well, it also at one point it also went to 381, right? So let's look at it again. For a bullish candle, for a green candle, this is open, this is closed. For a bearish candle, for a red candle, this is open and this is closed, right? And based on how the candle is formed, there are many ways to, there are many stories. And based on, just by looking at the candle, you can say, right, okay, in a given day, we have S&P 500 opened at 381 and it closed at 381.95, around 382. But then you see these long wicks. That means the trading day is a lot volatile. The volatility means that there is too much up and down of price movement in the day, right? It went all the way here down by like 4 points. It went all the way up by about 4 or 5 points, but then it settled somewhere in the middle, right? So that means there is equal pressure from both bulls and the bears. When I say bulls, that means people who want to buy and who want the price to go up. When I say bears, that means people who are trying to sell it, either sell the shares that they have or short sell. And then that the selling pressure will be shown at the top, from the top to bottom. And then the buying pressure will be shown in this wick, right? So if we look at this candle, for example, this is a red candle, it's a bear candle. And then you have this as open, 377, and then you have 376 as close, right? But if we look at this candle, we have a long wick to the downside, right? We have a big wick to the downside. That means at one point, S&P 500 on 4th November 2022, it went all the way down here. But by the end of the day, it went all the way back up. So that's the reason why we have a big wick here. What that means is we have a lot of buying pressure that came somewhere in the day when it went all the way to 370. So when you see long wicks, the downside, it's usually an indication that there are a lot of buyers on that day, and there is a potential chance that there could be a continuation to the next few days to the upside. Again, it's not guaranteed. It's just an educated guess that, okay, you have a long wick here. That means there is a lot of buying that came in, and then the next days could possibly be a green days or a bull days, right? So that's how we read the candles. And there are a few websites that basically explain the same. And then I've looked around and found few websites that have a very good explanation on these. It's essentially the same thing. I'll also post the links in the chat in the session chat in the Zoom meeting. But basically what they say is for a green candle, this is the open, this is the close, this is the low, this is the high. And when it's opposite for the red candle, this is where it opened, this is where it closed. This is the low, this is the high. The low and high are same. What changes for a bearish candle and for a bullish candle is that the open and close will change. Always open, close. Open low, close high. Open high, close low. Right? And there are few names for every candle pattern. There are different names. And if you basically have open and close at the same point, they call it a doji. And that's basically a term that's used to say that there is equal amount of pressure from both buyers and sellers, right? So if you see anywhere, any candle like this, I just saw one here, right here, it's almost a doji. I think it's a doji. Basically, it's pretty much the same. See the buying, the open and close is at the same point. So it's a doji, right? And we have basically a lot of candle patterns. And then they have given a lot of information on, what they call it. They call the upper one as upper shadow, lower shadow. They also call it as wick or tails. And they basically give a lot of explanation on the same thing that we have gone through. And if you don't have any wicks, and then if basically, let's find an example for most bullish bar, for example. This, for example, I mean, you have a little bit of wick here, but this is most bullish, right? Like you have very little selling at the top. This is the most bullish candle, right? Like you opened here, you closed here. This is the high. So you have closed almost at the high, right? So these candles, if you see any candles like these, with the whole candle is the body, and if it is a green, that is an indication that there is a lot of buying pressure. There are basically very, very little sellers. On that day, on a given day, this looks like October 25th. On this particular day, there are very little sellers, right? You can just say by looking at this candle. But let's go to the next candle. What happened on this day? This is the open, and this is the close, right? And basically you have a long wick. That means the high went all the way here, but by the end of the day, all the sellers have pushed the price down, 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 and it went all the way down. So the sellers have pushed the price from 387.57 all the way down to 381.98, right? So there are names for all these. I think they call it as a hammer or inverse hammer, and then this is a hammer. There are different names, and then this uh, website has all these names like long bullish day, long bearish day, short day, shooting star, morning star. I mean, there are different names. In short, there are many traders who basically trade just by looking at the candlesticks. And because the candle tells you a story, right? This candle right here tells me a story that it has opened at 381, closed at 382. But the key plot in the story is that it went all the way up, but by the end of the day, the bears were in control, the sellers were in control. It's not the buyers who was in control. But this candle, the buyers were in control. This candle, the sellers were in control, right? If you look at this candle, even though it is a red candle, you can clearly say that this is where S&P 500 has opened. It went all the way down here, but then the buyers have stepped in, and then they have pushed the price all the way up by end of the day. That means the buyers were in control on this particular day, right? And then we can pick any random day, and it's not like, for example, this is not a doji, but it's almost a doji. And then this is when you don't really know a direction on this particular day. I think June 6th sometime. You don't really know a direction on this day. You cannot really predict, will it open here next day and go up, or will it, go down? Looks like it gapped down and went to the downside. So few traders, use the doji to take a direction one way or the other. It depends on based on, like, if it is going up, and then if it has 2-3 dojis, that means there are few sellers there, but the buyers are also trying to buy aggressively, and then it could take a next leg up if it is a doji on the upside. If there is a doji on the downside, there were buyers, but then there were also sellers, and the next day the sellers took control and the price went down, right? So this is a basic candlestick, and this is the standard candlesticks that we have on any charting platform by default. This is what you guys are going to see. And if you're just coming out of Robinhood, or following like Yahoo for charting, you'll probably see a line. So this is basically, I think they pick an average on a day, and then they will show open and close in a line chart. And you can change it to a different style. I believe on any charting platform, you'll be able to open the candlesticks. So the candlesticks are the standard, like I said, and it is not fancy. It doesn't give any averaging or anything as such. Few people like to buy when a candle closes above the previous candle, and then they try to hold it till the candle closes below the previous open, like this, for example. Some people just purely trade based on the candlesticks, right? Like they don't look at anything. Maybe some may look at volume, but most of them just use candlesticks, some of the traders, right? And I mean, look at this candle right here. Like this is one of the most bullish candle out of the whole chart. This is on Feb 24th, right? So that's the standard candlestick. And one should understand, because it's just not, where it is closing, you should also understand the whole story. It's just not where it opened and closed, but the price action on the day. It's important. There are few other ways to represent the same. They use the bar chart, which is also like high, low and high, and then this is open and close. It's basically the same thing. They have it in a different representation. And I also have one article. Go back. Which basically explains a bar chart. And it's basically the same. Like you have the open, high, low, close, and the bar chart basically shows you the same thing. This is the low of the day, high of the day, open and close. And you can change whatever you want. It doesn't change what we have from a candlestick pattern will not change what's going to happen. All it shows is what's happening. And it's pretty much real time, right? There is one nice candlestick pattern that's called Heikin-Ashi. And it's basically an average of that particular period. It's good to use Heikin-Ashi for intraday. When some people tend to close the position very early, what Heikin-Ashi does is it basically averages the price. And the price that you see on the candlestick on Heikin-Ashi, it's basically different chart type. And the price you see on the Heikin-Ashi may or may not be same as the price, the actual price of the security. Because Heikin-Ashi, what it does, it averages out. So it will help you stay in a position more because it will only show a red candle or a green candle only if the average is higher than the previous average. So instead of showing you the real time, Heikin-Ashi basically averages the value of the price, and then it basically shows, it plots that on the chart, right? So some people use pure Heikin-Ashi candlesticks. What they do is, I'll go long, or I'll buy something if there is a green candle, and I will sell only if there is a red candle, because the average price on this day is lower than the day before. So they will open here, somewhere here, and then they'll close somewhere here. They'll open here, they'll close here. They'll open here, they'll take a loss, close here. They'll open here, they'll close here. That's one kind of traders, right? And even short selling or buying puts, for example, for options. They'll buy some puts here, they'll close it here. They'll buy puts here, they'll close somewhere here. So basically, it smooths the price action, Heikin-Ashi, and it basically averages the price out, and it basically shows a smooth trend. It basically helps you figure out the trend. It won't let you come out of a position very quick. If you basically switch it to the actual candles, you see there are a couple of greens, a red, again 3 greens, 3 reds, like that. But if you focus on the same time period from here to here, right? So you see a lot of greens, a lot of reds, a lot of greens, a lot of reds. But if you look at Heikin-Ashi, you will see more greens than the reds. It's because it averages out the price, and then it plots the candles based on the average. And then there is a calculation on how the average works, if anyone is interested. It basically shows the trend, direction, and strength in Heikin-Ashi, right? And I think this is derived by Heikin-Ashi is like in Japan, they used to use these candlesticks. It's like slightly modified version of what they used to use. But like I said, it helps you stay in the trade. And then if anyone has fear of exiting or coming out of a trade too quick, they can try using Heikin-Ashi, right? And the high and low, they all apply the same, except that the price that you see where it's closing or the current price may not be the same as the price that it is showing here for the security, because it is an average. It is not the true price for Heikin-Ashi. So we have to keep that in mind. And there is one more interesting way of looking at a chart that's called equivolume. What it does is it basically shows not only the price action, it will also plot the candle. The width of the candle is basically depending on the volume on a particular day. For example, you see some candles are big. They're not only long, but they're also, fat. That means on this particular day, the volume, when I say volume, that means the number of people that are participating on this security is high relative to the other days. That's why this particular candle, it is big. It's also wide. It's wider than this. It's wider than this, right? So if you simply plot equivolume, some people have trouble, looking at the volume at the bottom. I mean, you can go to studies, right? Sorry, I have too many volumes because I play with these volumes. So you see here, instead of having a chart and then the volume is nothing but number of people. Volume is nothing but just number of people. If we are 100 people in a room and 50 people have traded SPY, then the volume will show for 50 people, right? And then here you can see there is the indication this is millions and there is a volume, right? It is 252 million trades on that particular day, or transactions. I shouldn't say trades, transactions on that particular day. So if you see the next day, the volume is less. It is 170 million. The next day it's a little higher, right? So there are a few days where the volume is very low, but some people, they will have this candlestick, the standard candlesticks, and then they'll have the volume. And then they will try to, look at this candle. Okay, today the volume is low, the volume is high. On this day, the volume is higher than the previous day, right? Instead of that, all they do is they will simply go to equivolume. You don't really need a volume if you have an equivolume, because on single chart, you can see the open. It doesn't show the open, it shows the close, and it also shows the low and high equivolume, right? But it also shows the width. The width of the candle in equivolume represents the volume. The more volume, the more market participants that we have on a particular day, the wider the candle will be. It is an easy way. Like if you ask me, let's say this, right? In last few days, this day we have a good volume. And again, yesterday, we have a very good volume. We have a good bull run, and then we have good volume. That means more market participants. Many of us have bought calls or bought stocks. And then that has resulted in, high volume, right? And let's just say yesterday, if someone would have thought like, oh, it's a red day, maybe the next day will be red, but they have to look at the volume. It's very low compared to the day before, right? And on this day, for example, the volume is very, very low. It's much thin. So the volume here is relative to the chart and the time frame that we select. And we will get into time frames in a minute. But this is another interesting chart type that one can explore if you like. But again, every chart type will say the same story. It will basically show you where is the open, where is the close, what's the high, what's the low. Pretty much all of them. I don't even use area. It's basically where it is closing. I think it's more or less like a line chart. So I don't even use either line or area. Personally, I just use candlesticks. I don't trade based on the candle patterns itself, but equivolume is something that, at times that I find interesting to look at equivolume. And if someone just wanna, trade based on trend, Heiken Ashi is one of the good candle types out there. So that's basic fundamental about the candlesticks, and how when you open a chart brand new on any charting platform, this is what you see, and this is how you can play around with different candle patterns. And every candle tells you a story. We have to understand what the chart is trying to tell us. And then the way that we can read is the way that we just have gone through. And I'll share those links, and you guys can go through if you want. So that is candlesticks. Now the next thing is, okay, so I know how to read the candles, but I don't want to. This is for 1 year. I'm not a long-term investor. I want to do an intraday. What I mean by intraday is I want to buy and sell on the same day because I don't believe what happens tomorrow, right? Or you want to basically trade for a week, right? So for that we have time frames, and every charting platform does that, have that. And then you have different time frames on here. And then the way that we have to represent or look at these time frames is the left side of this column is basically what's the duration the chart will cover. And then the right one right here basically tells you what is the duration of that candlestick. So right now, what I'm using is 1 year, 1 day. 1Y stands for 1 year, 1D stands for 1 day. So 1 year, that means that the whole chart is for 1 year, and 1D stands for 1 day. That means each candle represents 1 day of price action. This is 1 day, 1 minute. If I click this, what happens is this is for 1 day, and this is pre-market, and this is post-market. And if we don't want to see that, we can remove it just to make it look clean for you all. I just removed the pre-market and post-market. And what I did was I selected 1 day, 1 minute. What that means is this whole area represents one trading day, which is yesterday. And then 1 minute, meaning each candle represents 1 minute of price action, right? I mean, you can go to any candle. This candle is for 1 minute, and that minute is 14:49. You can see at the bottom. Like I said, every charting platform pretty much have the same. So if you look at this particular candle, you can say like, this is where the candle has opened, and this is where it has closed. And on this minute, the price went all the way up to 388.93, but it closed at 388.48. And then there is no buying at all. There is no wick at the bottom. That means there is a lot of selling pressure. There is no wick at the bottom. That means no one even tried to push it up for this 1 minute. The result is that the next minute, there is a follow through, and then there is more selling on this minute. But there is some buying this minute, right? See, you see some buying. The next minute, there is selling. It went all the way here, but there is also buying, right? So this is how we can look at a candle. And then, if you think like, okay, I want to do intraday, you can basically select 1 day, 1 minute. But you say, no, I'm more like a swing trader. I go to office. I don't have time to do intraday. You can select 20 days, 1 hour, or you have 180 days, 4 hours. So let's say 180 days, 4 hours. What that means is the whole chart represents 180 days, covers 180 days. And then you have each candle for 4 hours of trading price action, right? So this is for 4 hours. This is for another 4 hours. So the whole 4 hours of trading price action is captured in one candlestick, right? And then someone might say like, you know what, I don't even buy, if I buy something, I'll sell it only after 10 years. You can even go that far, like 10-year, 10Y stands for 10 years, M stands for monthly. That means the whole chart represents 10 years. M stands for each candle has a price action for a month, right? And if you want to add your own timelines, like, some people have these crazy numbers, like they think 21 is, something, some Fibonacci number, they have something crazy, right? So you can still add your own custom dates, custom times, or you can basically add your daily time frames. Like you can select like 20 years. You wanna, go for every candle. So this particular time frame will show me a chart for 20 years, and each candle will be 4 days, right? If you want a shorter time frame, you can go to intraday, and you can go and select, like 5 days, 5 minutes. Click add, apply. Okay. You go there, scroll all the way down. You see 5 day, 5 minutes. I select that. That means the whole chart is for 5 days. Each candle is for 5 minutes, right? So this is basically the very basic, the number one step for anyone who want to get into technical analysis. You need to understand what is a time frame and what is a candlestick, right? And again, the time frame is up to you guys. If you are more like an intraday player, you want to get in and get out in like an hour or 2 or 5 minutes, you can go for a daily, like 1 day, 1 minute. If you are more like a um, uh, swing trader, you can basically go for a longer time frames, like 180 days, 4 hours, 380 days, 360 days, 4 hours, right? Uh, if you're an investor, you can basically have 1 year, 1 day, or the monthlies. So you buy and you forget, but once in a while you just want to come back and see. You can look at the price action. Each candle, like I said, represents 1 month, and then it is for a total of 10 years, right? So this is, in a nutshell, what the basics of the charting, candlesticks, and the time frames that we see here. And the upcoming sessions, we will be covering a lot of indicators like moving averages, VWAPs, and types of moving averages, and a lot of averages, oscillating indicators, MACDs. We will cover all of it, but we'll go one step at a time, one session at a time. So people who are at a very basic level, who doesn't know anything, who knows you don't need these sessions, but people who doesn't know anything, you can start from here. You can build your technical analysis knowledge from here, and we can go slowly from here. And all these sessions will be recorded, and they will be added to ThinkSabio YouTube channel. And I will pause there, and we have 15 minutes. We'll see if there are any questions, and we can answer them in this 15 minutes. You can type your questions in the chat if you have any, so we can look and we can try to answer them.
Hey, Viswa, which application is this that you are accessing?
This is called Think or Swim, and it is basically a charting tool for TD Ameritrade. TD Ameritrade is a broker, and then if you have a brokerage account, you can install Think or Swim and link your TD Ameritrade account to Think or Swim. So this basically is Think or Swim, and this is, I mean, I have looked at many charting tools, charting platforms. I would say this is the best. I mean, nothing can beat Think or Swim. This is the best.
Account. So can it be integrated with Fidelity also, or only TD Ameritrade?
I don't know, honestly. I'll probably have to Google it.
No, that is not possible, because TD Ameritrade is, it's all one company, right? TD Ameritrade, Think or Swim. So if you are in one of their system, then you are there in everywhere.
Yeah, I don't think then.
I just want to do something like, it's a free, like
it
you
is
can just
free.
open the account, and you don't have to fund it also. I mean, they don't say, I'm not sure. You can just at least use for charting purpose at least.
Oh, okay. Thanks.
Yeah, TD Ameritrade, like the brokerage account is free. I mean, honestly, I don't use TD Ameritrade for my trading. I use some other apps, some other brokerages. But for charting, I use only Think or Swim. I'll not touch anything. I played around with TradeStation for some algo trading, but that's for a different purpose. I mean, you can do algo trading even in Think or Swim if you want. But yeah, that's for another day. Yeah, think or swim. That's it. That's all you guys need. Start with think or swim, and you will have a lot of support. There are a lot of free communities out there. You go to the chat room here, and then there is trader launch and swim lessons. Think script. If you guys want to do, scripting, you can basically just open here. There are so many people live. You can chat with them. I mean, this is just amazing. The things that you could do in think or swim is amazing. Like, you have many people live, just like us, and then they will share their trading techniques and watch lists. I mean, there is a lot here. I mean, you have a lot of scanners. Everything is free. So my vote goes to think or swim.
Hey, Deviate, in the volume, like you previously showed a screen for volume, right? What is like red and green indicates there?
It says that the volume for that, well, if the day closes red, it basically shows a red volume bar. That's it. If the day closes green, yeah.
Okay. So it depends on the like Heiken-Ashi candle. So if it is that candle is green, then this will be green, and if that is red, and this will be red.
Yeah, it's not Heiken-Ashi. I mean, any candle. For example, this particular candle, it opened low, but it closed high. That means it's a green day. The candle, the volume will show as green color.
Green. Okay. Okay.
You can actually have candle like volume. Like, if you go to, for example, settings, go to equities, you can check this. It doesn't even show you color. It will simply show you the volume. That's one way of looking at it. But yeah, it's just the color basically based on if it is green on the candle or not. Like, if the close is higher than open, it will be green. That's all. Simple logic.
Got you. Thank you.
No worries.
Right. Hello. Hi. Quick question. Can you hear me?
Sure. Yeah, I can.
Okay. So how do we calculate? Let's say we have like a 2 or 3 continuous green candles or red candles in a row. The first one is actually, let's say if it is green candle, the second green candle will be like a little higher than the first one, right? So how can we calculate? Because this is actually related to the entry. So how do we calculate? Let's say we want to calculate the 50% of the price of the first green candle, and we want to enter there before actually the second green candle forms. Is there any way to calculate like that?
There is no way to calculate our entries or our exits per se, but in general, for example, if you're gonna use Heiken-Ashi, I mean, if you have a green candle and then you see a green candle, you take a trade here, you basically have to have your own rules. Like, if until I see a red candle, I'll stay in the trade. There is no calculation or assumption. We would not know what the next candle will be. Right. And there is no way, like, there's no one in the world who can say what the next candle will be. But what we can say is, like, based on what we see, we can say, like, okay, so I'm using Heiken-Ashi. I see a green candle here. It closed green. Next day, I'll open a long position. I will not close till the average of the Heiken-Ashi candle shows it's going downtrend. For example, that's just an example. It doesn't mean it, you have to do it. The next candle could be red, right? Like, let's see, is there a candle that's red here? Okay, so here it is red, right? We will think the next candles could be red, but it is a big green. And here, see, there is a mix and match, like green, red, green, red. When you see something like this, like here, that means the price is traveling in a tight zone. It's also, some call it as like a squeeze, some call it as trading in a zone, right? So it's basically trading in very tight zone. It's not making big moves, right? So we basically have to understand that, okay, if you're buying calls or puts on these days, you're basically burning your money, because the theta, the time decay, will eat all your contracts, right? So you want to basically trade on days where you have, something like this, like an uptrend or a downtrend. If something is going sideways, I will personally stay away from those days, right? There's no point. If you're doing options, if you're doing stocks, I mean, you can still buy, and you can say, like, okay, this is my stop loss. This the very end of this candle. This is my stop loss. If the stock goes below 374, I will exit, right? You can take it as a support, right? We'll get into support and resistance in the next sessions. But, in short, there's no way we can predict what's going to come.
Hello.
Okay, thank you.
Hello.
Yeah.
Yeah, I have one question. So is it better to look at a single candle pattern, or is it better to look at Heikin-Ashi?
Well, like I said, for example, you're doing day trading, right? So this is 1 day chart, okay? And when you look at 1 minute candles, like there'll be a lot of downs and ups and downs and ups and downs, right? Like the price travels in a wave. Instead of having a regular candle, if you use Heikin-Ashi, it will let you stay in a trade for a more time, for example, right?
Mhm.
And apart from these Heikin-Ashis, there are few custom indicators, which are part of the Thinkorswim community, like trend, right? For example, there is an indicator like this. It will basically, show you if a price is trading above a particular range, it will show you all green. If it is going down that range, it will show you red, right? There are many ways to use these candlesticks, but I would say simply using a candlestick may be very hard, but it will basically in intraday, right? In intraday, it's very hard to trade only based on candlesticks. But if you are trading on a long term, you may, have, let's see this, right? Like this candle is huge. It's very big. Look at the volume. The volume went up so much compared to the other few candles. So this means there are a lot of buyers on this day. And then if you look at it from this day, this is October 13th, to this day, the price never came this low.
Yep.
So this candle, you see, right? It's big with a lot of volume. It opened here, it closed here. Almost how many points did it go? It opened at 348. It closed at like, what is that? Like $18? That's a big move for S&P 500. That means there are a lot of buyers, and you can anticipate a slightly uptrend follow in the following days, right? So you have to look for strong candles with strong volume. Sometimes there could be strong candles with very low volume. You have to look at the price in relation to volume. Volume and price goes hand in hand. That's why you can also use, equivolume, right? You see, just with our bare eye, we can make like this candle is so strong, right? And this candle is so strong. And the following days, it went up a few days. This candle is so strong. The following days, it went up, right? And it doesn't happen like that. Some days you can have a strong, candle like this. And the next day, some war or some bad news may be there and it will just go down, right? We don't know. This doesn't tell you any news or any information. All we can see is if it is going up or down.
Right.
So the macro events, no one can predict, right? Like who knows? Like this is what 224, 225, some crazy, nuclear testing, something will happen. Everything will just go down. This will help us understand where we have strong buy and strong sell. See, if you look at here, for example, these candles, compared to this buy candle, this sell candle is huge, right? With big volume. See that?
Yeah.
And the following days, it just went down.
Yeah, that's a bearish engulfing, right?
Yeah. So you can use the equivolume if you want, or you can simply use the candlestick with the volume at the bottom, and you can take a decision.
Yeah, the problem is I trade SPX on 1 minute and it gives too many buy and sell signals. So I'm just trying to see what would be a better way to do it. Is it better to use a Heikin-Ashi, or is it better to use like a normal candlestick patterns?
Well, you'll probably have to use more than that. You'll probably have to, take help from other tools like moving averages. It's just hard to.
Yeah, I do use the moving average and the bands and everything. But just as if I want to look at the candlestick.
Yeah. So what happens is, for example, right, you see 3 candles here, and then there is 1 candle just going down. You will think like, oh, it's just going down now. But then the next following candles, it just went up, right? If you use Heiken-Ashi, maybe it will help you stay here. See, it doesn't show you that big of red candles because the average is not that low. So you may just stay in the trade. You may just ride it all the way up here. So Heiken-Ashi will definitely smooth and definitely help us to stay in the trade for a long time. At the same time, you should also understand that there is a probability of this going just down and you may just lose as well, right?
Yeah.
But like I said, it helps staying in the trade. When there is trend, Heiken-Ashi will show the trend.
Got it. Thank you.
No worries. And someone, let me look at the chat real quick. We have 5 more minutes before we close.
I have a question. Some people do the scalp on a minute candle.
Yes.
How do they do that? And is it good? It is very risky, I know, but some people make good money out of it. So do you do that? How to do that?
Well, I don't do that, honestly. But for example, I was looking at this particular ticker on Friday, for example, right? And I don't use Heiken-Ashi, but in general, right? You can scalp minute on minute basis. So this is the low of the day, and I use some moving average. I don't want to plot those moving averages here because I don't want everyone to, feel like, it's a lot. But this is ZOM, and I was looking at this on Friday, right? And then there is a big run on Friday. So what we have to do is basically, let's just say you are here at 9:01. You don't see all of this, right? On the right side, you don't see it. You see it now, but you don't see on the day. So let's just say you are just looking at this. You're right here. So it bounced here real good, right? You look at the wick here, that's a big wick. That means there is a lot of buying. And then even though it's a red candle, you see the volume is higher than the previous days. So people, when they see these big wicks and then the following green, they buy here, right? And then they just stay for the next candle, they sell it off. So you see, it's just like what, 10 cents, maybe less than 10 cents, maybe around 10 cents. But then they go with size. They buy like 20,000 or 30,000 stocks. It's what, 25 cents, right? So they buy with they take huge shares, they scoop it up, and then they'll just scalp minute by minute. I wouldn't do a minute by minute scalp. If you really want to do some scalping, I would go with 5-minute candles at least. I would go with 5-minute candle, right? And that way you will have at least 5-minute period, and you will not simply buy and sell. And then when you have a 5-minute average, you will see a nice downtrend and a nice uptrend. So it's easy to scalp on 5 minutes than it is on a minute. That's just me. I mean, if you want me to scalp, I will use 5 minutes. I'll not use 1 minute. It's too much noise in 1 minute, if you ask me. Like, I mean, one candle is up, one candle is down. That's just too much for me. That's just my personal opinion. But there are many people who does minute on minute.
Yeah, it's easy to lose money. Like, we may win, but then at the end, you may lose all in a short time. That's the risk of it. We have to remember that part. Yeah. Thank you for explaining.
No worries. So let's see.
Yeah. Hi, Viswa.
Hey.
How to find volume if any stock, if it is coming more volume or not, and if it is more volume, how can we get some alert or something?
Oh, alerts. I mean, you can basically, I mean, for alerts, you can go to scan if you have Think or Swim, and then you can go to the volume, and then you can select unusual volume or volume change. That will tell you, like, if the current bar's volume increased by, you can change from 20% to 120% from its typical average over 50 periods, give me an alert, right? And then you close everything. and then you scan it in all stocks, intersect with, if you are playing options, you can intersect with, I mean, we'll do the whole scanning session later, but you can do that. You can find out the alerts. You can get the alerts directly from the scan page if you want. You can also look with your eye if you want. You basically have to see this bar here, the volume is high than any volume bars before. That means there is a good volume that's coming in, and for buying, and then you can basically take a position here. I mean, if it was me, if I'm just looking till here, I would just take a long position here, and then I will keep a moving average underneath, and then I will just ride the moving average up all the way up wherever it goes. So the volume is here, and then you can find the volume. There is an unusual volume scanner by default on ThinkSabio, so you can use that if you want. And someone is asking.
Thank you.
No worries. Someone is asking day trade 1 minute time frame. Well, even for day trade, I wouldn't use 1 minute. I would use 5 minutes. What's the name of the presenter? I go by the name of Deviate Standard on the group. I used to take sessions in the last year, but I had to take some break due to some personal reasons, and I'm back. How to choose targets when we enter trade. Again, targets is hard. That's a whole another session. There are many ways to take targets. You can go by ATR, ADR, which is average day range and true range. So we will get into the targets in one of our next sessions. But in general, you can ride a moving average, or you can go for ATR, ADR, or some people like Fibonacci retracements. You can go for those. I mean, everything is here in the studies. And like I said, we will go through, most of it. As much as I can cover, we would cover in, see, there is one thing called ATR trailing stop loss. I mean, you can use that if you want. It would show on a trading day. If you have it on, it will trigger. Yeah, we will cover all those indicators in our upcoming sessions. So this is the ATR trailing stop loss. So for this ATR trailing stop loss, you should exit here. You enter here, you exit here. You enter here, you exit here. So we'll cover those.
Hey Vishwa, do you take any other type of training sessions or something apart from ThinkSabio? Maybe I want to take separate class from you. That's really good.
No, man, I don't take any outside of ThinkSabio, but I can assure you that I will cover everything. You don't have to take anything. Trust me. We will cover everything for free in ThinkSabio. If you have any topics you want to cover, just post it in the group, in the ThinkSabio group, and I will make a note of those, and I will cover those topics. Whatever topics you guys have interested. Once my curriculum is done, I will take those, the topics of interest from you guys, and I'll cover those as
well. But how did you learn all these things? It's really, really good. Your explanation is also very good.
Oh man, it's a long story. But long story short, I just spent a lot of time on this. I really am fascinated with stock market. It's not like I want to make money out of it, but it's like, some of us, we just get fascinated by cricket. Some of us, we get fascinated by soccer. I'm just fascinated by stock market. So I just, learned and just spent time on it. That's it. It just takes time. That's all. Anyone can do it.
Hi, Vishwa. A couple of questions.
Sure.
Like in the equivolume chart type, right? So it doesn't show the open close.
It shows the close, but it doesn't show the open, I believe, and it shows the low and high. So for the equivolume, this is the low, this is the high, but it doesn't. It shows the close. I don't see any open anywhere.
Okay.
So there is
what is the gap thing in the center?
What's it?
Like in the bar, like when you just like make a bit, right?
Yeah.
Yeah. What is that? The dark thing, like in between? Yeah.
The gap. So it means the price went all the way up here, and it closed for this candle. It closed here. That's the gap here.
Oh, okay.
Yeah, so it means the price went all the way down here and it closed here. That's why you see some gap here.
Okay. And with how do you compare this ThinkSabio with TradingView?
I'm okay with TradingView. It's just that I started with Thinkorswim, and I paid initial days. I paid a lot of money for trainings on Thinkorswim, and I just got into this. But again, right? There's no reason why anyone should pay money. It should be free of cost. But I like Thinkorswim. I also tried TradingView. I have TradingView on my trading station here. I do some automated trials on trading station, but like I said, there's no reason. It's all the same, but I like this.
Okay, thank you, sir.
No worries.
Sorry, one question.
Sure.
So regarding the time frames, right? So 1 minute is the leading time frame, and rest of them are the lagging to that, right? Like let's say
1 minute. 1 minute is the minimum you can set, and there is also a thing called a range-based chart that will actually bypass all the timings. It will only show you by ticks, meaning only if a price moves certain level, it will show a candle. It will not show anything just because there is time, right? So there is also a time frame that is not time frame, but it is range-based, right? But if you are talking about time, 1 minute is the minimum. If you want to go even down than 1 minute, you can go to range and you can select ticks. You can give like 10 ticks if you want. It will take time. But yeah, this is less than 1 minute. You go tick by tick, but it's not time. It's like it has to go 1 point up. That's when it will show.
Okay, thank you.
So there is under time frame, you have the range if you want to explore that.
Got it. Yeah, thank you.
No worries.
All right, Viswa. All right. I think
we wanna wrap the session. It's 5:05. If you guys have any questions, you can post in the education group and the ThinkSabio education group. We will be covering and sharing all this material in the education group. I mean, you can post it in options or stocks as well, but it's best if you post it in the education group since I track it.
Yeah. Just one last question, Vishwa. Like, what was the thing that the tick that you just showed now?
The ticks? Yeah, here. The range? Yeah.
No, but I did not understand like what a tick actually represents.
It's just like, so for example, based on the price of the stock, if it moves 1 tick based on its range, for every stock, the tick value will be different. Okay. So it has to do a particular range, then it will show as 1 tick up.
Okay.
If it goes down, it shows 1 tick down. And this is one more way of trading the trend using the ticks or the range. But then this is slightly advanced, so I did not want to confuse everyone. Okay. So for now, let's stick to time frames. And when we talk about average true ranges and average day ranges, we will look at the range and the range-based charts. There are many charts like Renko bars and many things that we don't want to pollute our brain at this point, because trust me, there is more that we don't want to listen because it's just noise.
Okay. Yeah. Thank you very much.
No worries. And thank you all for your time, and we'll talk to you all in the next session. Thank you.
Yeah. Thank you, Deviate. Thank you, everyone who joined. We'll catch up with more sessions one by one. Have a good rest of the day.
Thanks. Bye.
Thank you, Dhanu.